Get a ringside seat as BloombergQuint goes to the India Economic Summit. With exclusive sessions and panel discussion, 5th and 6th October, only with BloombergQuint.
Good morning. Thank God it's Friday. You've tuned in to BloombergQuint Live, India's first live digital business news streaming service, and I'm Menaka, Doshi.
Good morning to all. I'm Niraj, Shah, and you're watching Indian Open. Good morning, Ira.
Good morning, everybody. These are the headlines this morning. We've got Asian markets headed for the best weekly gain since July as investors cheer improving global macro numbers. Crude prices jumped the most in a week after Russia and Saudi Arabia agreed to extend the OPEC production cuts until the end of 2018. Future Group looks to secure its position as the country's largest brick-and-mortar modern retailer, will spend 655 crore to buy Hypercity. And the Uday Kotak-led Committee on Corporate Governance suggests an overhaul of the norms. Recommendations include a separation of the chairman and CEO roles and making 50% of the board independent.
We'll talk about some of these in greater detail in first word as well, but let's just take a look at the trade setup for the day. No surprise really, the global markets were all cheering. US markets end at record highs. Asia is taking on cues from there, and the SGX Nifty will show you that you'll start off with a tick of green, so to say. How big a green remains to be seen. Yesterday was deceptive too, but suffice to say we'll start off with a bit of green. The key though is that the last two sessions we've had the broader markets doing much better, even if the Nifty would have been sluggish. Though the Nifty was sluggish yesterday, day before we were doing okay, but the outperformance of the broader markets is pretty strong. So the mid caps and the small caps ended almost 1% apiece. The mid cap slightly less than 1%. The small cap index ended almost 1% higher, despite the fact that the benchmark indices, which is the Nifty and the Bank Nifty, came off in the last half an hour to 45 minutes of trade. So there's a bit of a divergence that we're seeing there, and a bunch of stocks are reacting and moving up in groups. So we spoke about how pharma has had a really good run the last few sessions. Yesterday was the turn of mid-sized pocket specialty chemicals. Name a specialty chemical company: Gujarat Fluoro, Navin Fluoro, Deepak Nitrite. Strong delivery-based buying that we saw in all of those. However, what should one watch out for as far as today's trade goes? 3 or 4 stocks that probably will be active amongst others. So Shoppers Stop, the acquisition of Hypercity by Future Retail at valuations which IDFC Securities says much better than what the street was working with. So this would be interesting. Inox Swin, maybe Suzlon, wind power tariffs at historical lows. And then a couple of very interesting house notes. So Jubilant FoodWorks, remember the stock was up 5% in trade yesterday. If you were wondering why, Morgan Stanley's come out with a note upgrading Jubilant Food. They've doubled their target price, but the target price is at 1780, which is still about 25% higher than the current market price. So strong move in Jubilant yesterday, strong volumes. Could be interesting to see if there is some further traction thereof or no. And hey guys, maybe on expected lines some would say, but or maybe not, but the IDFC Shriram deal gets a bit of an extension. A lot of people I know in the trade community are hoping that the deal doesn't fructify so that Shriram Transport could do well, because the belief is it's not great for Shriram Transport. This has been extended. Let's see if there's some bit of pressure on the stock today. Trading pressure, but pressure nevertheless.
Yeah, okay. Well, let's see what they come up with, because, they had a 90-day period to come up with merger ratios. They seem to be rethinking the structure at this point in time, merger ratios aside. So that's going to be an interesting one to watch if it does fructify at all. All right, let's get to first word today. That's the section in which we bring you the editorial stories that Niraj, Ira and I have picked. And here's what we picked for you this morning. The country's largest modern retailer, Future Group, is spending 655 crore rupees to further consolidate its position. We'll get you more details on what that deal means. Are wind power projects viable at tariffs of less than 3 rupees per unit? Perhaps not. India's sudden love for electric vehicles may leave some companies in the dark. And finally, is India Inc. ready for yet another new set of corporate governance norms? We're going to shine the spotlight on all of these conversations, starting first with the big retail deal we saw. Niraj?
Yeah, so Future Retail continues to expand its footprint. The Kishore Biani-owned retail chain will buy Hypercity from Shoppers Stop for 655 crores. Agam Vakil is standing by with the contours of the deal. Agam, good morning.
Good morning, Niraj. Well, as per expected, in terms of what we were expecting, the deal has come through, and Future Retail will buy Hypercity for 655 crores. To break up this number, 500 crores will be remunerated through shares, and another 155 crores through cash payment. What does this mean for Future Retail? Well, more consolidation in the western region of India, especially in the cities. What does this mean for Shoppers Stop? Well, it gets to get rid of a loss-making venture, and that way it also leads to better EBIT margins going forward in FY18 as well as FY19. Moreover, it also leads to an improvement profitability because of the fact that it will have less interest outgo. Well, at least as far as IDFC Security is concerned, they have said that the deal is very good for Shoppers Stop, and they have mentioned the same aspects and details that they are looking at a reduction in debt, and they are valuing Shoppers Stop at around 911 crores enterprise value, which is a lot higher than what the street was expecting. And because of that, they have rated our Shoppers Stop as an outperformer, putting a price target of 590. Considering Shoppers Stop is currently trading around 510, there is still a substantial upside that IDFC Security sees in this counter.
All right, thanks very much for that, Agam. We've got the other big brewing story, brewing now for several weeks, which is power tariffs, especially in the renewable power space.
Yes, it started with solar, and as those prices started to come down, people were wondering about the viability of solar players. Wind was sort of stuck in a strange place because if they didn't match those solar tariffs, people would just not want to pick up wind tariffs, especially states and discoms, which are stressed. So now, I mean, there are two ways to look at this entire story. One is that at the auction yesterday, and just get you the news, you had a very substantial decline in the tariffs because they've changed. They've moved from a fixed sort of structure where a certain amount of remuneration is guaranteed to these wind power producers to a reverse bidding process. That has meant that the prices have come down. So 264 per unit was the price that it settled at yesterday. Now that is comparable with solar. In fact, some reports suggested that it's lower than the average price at which NTPC supplies. But the question, of course, continues to be whether these lower tariffs are remunerative enough for some of these wind power companies. Will they put additional stress on the sector? And I think there are different views coming in this morning. There were a couple of reports. I think CLSA questioned whether these are going to be sustainable or not. But I think the HSBC report that the research team sent out suggested that the fact that they are now comparable with solar and thermal will probably make it easier for them. I would lean towards the argument made by CLSA because either these guys were making a heck of a lot of margin earlier, or they are going to have to sort of make sure all of their costs are kept under control, particularly finance costs from here on. Just on the risk that some of this leads to rejigging of power purchase agreements, I think that becomes a risk at a more macro level as well, because if you start to see states do that, although the center has cautioned states against it, so maybe they won't go in that direction, but if states start to do that, then all of your calculations go off stream.
I was reading one research report because now after yesterday's news of the auction and the price cut, a bunch of people have been issuing one, and there were two things that struck me. It says with the end of the 10-year tax holiday in FY18 and likely transmission evacuation from the first quarter of FY19 under the SCCI tender, wind volumes could collapse by 60% in FY18 and are unlikely to recover to the FY17 peak until at least FY20. And the second point this report makes is that even if the government target of 60 gigawatts needs to be achieved by 2022, India does not need any growth in annual wind installation. So they're suggesting that the pace at which we're adding to wind capacity is unlikely to move up faster, even if we were to meet that 60 gigs sort of target.
Yeah, and I think the industry is not particularly thrilled with it. Tulsi Tanti spoke to Bloomberg News yesterday, and his comments suggesting that banks are afraid of funding renewable projects at tariffs below 3 rupees per kilowatt. So I think he's absolutely right about that. I mean, we've seen that with solar. If that extends to wind, then where are they going to raise their funding
especially
from?
at a time when banks are so cautious about lending out, and power has always been a really sticky area to put your money into, and if it's gone from 4 to 3 to 2.5 now, you never really know where the floor is in this madness. So
Yeah.
Wow.
Sort of reminiscent of the road sector, right? We saw a lot of this aggressive bidding in the past in the road sector, and then we saw a lot of those developers come under stress in subsequent years.
Yeah, exactly that. And then eventually the government had to extend financing to them, if you remember,
Yes.
and easier terms of contract for new projects and all of that. And I think Nitin Gadkari spent a considerable time of his first year as
early years,
minister
yes, absolutely.
just cleaning that up so that
Yeah.
the road companies are in some shape to come back to the table to bid more, because otherwise what's the point of putting out all these NHAI tenders if there's nobody available to build out all of this, right?
Yeah.
So yeah. Wow, okay, that doesn't spell very well for the renewable sector.
But yeah, the whole model change, right? Roads as well. BOOT is now a thing of the past. I mean, nobody does BOOT, and probably precisely for these reasons, it just became so unviable to do those projects. Are we looking at the same thing? Because if you look at the stocks, Ida and Menaka, Inox Wind or Suzlon. Well, Suzlon hasn't gone anywhere any which ways, but Inox Wind, which used to enjoy certain institutional interests a year and a half, 2 years ago.
On your screen.
Yeah,
It's been just one way down.
Yeah,
for both those companies.
1 year, whatever you look at it, I think these companies have just
Inox
faced the
Wind
rocks.
had a fair amount of financial
Yes.
stress as well. I mean,
Yeah.
so, that was worth taking note of. So I'm not sure how they are bidding at these levels. Actually, I think what was interesting is that it wasn't an outlier bid. Everybody bid more or less at the same prices. So it wasn't, one guy coming to spoil the party. I don't know.
One guy, interestingly, spoiled the party in the next thing that you're going to talk about, which is the electric vehicle space. And I know before you get into this, Niraj, the most interesting story of the last 3 days or 4 days or last 1 week has been that electric vehicles tender that EESL put out, the government entity, which surprisingly was the lowest bidder for which was Tata Motors and not Mahindra and Mahindra, who has, if any car maker has experience of electric vehicles in this country,
M&M.
is M&M, because they acquired Reva, right?
Yeah.
And so then yesterday, finally, I think we got news that they were L2, Tata Motors was L1, and that fascinating story is up on BloombergQuint.com. And Tata Motors had bid lower than Mahindra and Mahindra's Pawan Goenka commented that he didn't quite understand where that pricing came from. Because if anybody knows the pricing and the economics of electric vehicles, it's M&M.
Yeah.
But they finally matched that bid for a certain portion of the order, and so have been able to sort of find their foot in the door for a certain number of vehicles. This is only phase one, so I think they're doing some 300, 500 vehicles. Eventually, the bid's about 10,000 cars. But fascinating story that Tata Motors has used this and a low price to get into the EV space, and that's exactly what you want to talk about today.
Yeah, so, well, that and the other interesting bit, the news that came out yesterday that NBCC has tied up with a Finnish company. It's just a tie-up. There is no JV or anything form to set up charging stations, a whole network across the country. So things are moving at a rapid pace when it comes to EVs in India as well. We may want to think that it's 10 years away, but you never know, it might be quicker. But I just thought we should try and just do some research of who could benefit and who could not, if indeed this were to become a reality sooner. It's an unknown terrain, so it's very difficult to predict who will be the winners and losers, because a lot of people, it's a mixed bag for them. They will benefit also and they'll lose out also. So here's the small list that we've called out. So potential winners. Now Bosch, they have announced plans in September to offer electrified solutions in India. And remember, in Germany, Bosch offers app-based electric scooter rental services in tie-up. So they also do the last mile, which is give the scooter services to the clients, but they are also trying to offer solutions to power electric two-wheelers and three-wheelers. M&M and Tata Motors, we've spoken about them. They've in the order for the first set of EVs. Ashok Leyland, and you remember Gopal Mahadevan saying that they are looking at electric commercial vehicles, and they are already present in electric buses. And if indeed state transport units could actually start giving out orders, Ashok Leyland could well be a beneficiary. That's the third one. And companies like Amara Raja and Exide, they are already present. Amara Raja, for example, is already present in lead acid batteries for electric vehicles. Can they extend it to lithium ion? They have expressed interest. So has Exide. So you probably foresee that these two battery makers in India could probably, there's no certainty here, but probably make a mark for batteries, because that's the key cost and the key raw material for an electric car. So that was one. I just looked at a bunch of other reports to try and see who could lose out. Now, conflicting reports on Bajaj Auto, because their three-wheeler market could get hit, but they've already preponed their e-rickshaw plans from 2020 to 2018. So they want to get into this market faster. Maybe they see that this could actually take off in a hurry. So it's a mixed bag. But there are some small auto component companies which could lose out. The top 3 or 4, Motherson Sumi, Bharat Forge, etc., have something working for them on the EV space as well. But what doesn't have anything working for them? Cummins, they manufacture diesel generator sets, so that business is out whenever it happens. Greaves Cotton, they manufacture diesel engines for 3-wheelers. You would argue that if indeed Bajaj Auto's assumptions are true, then it's bad news for Greaves. And then there are some other companies like Sundaram Clayton and a few others. They make parts, oil filters, cylinder heads, etc., specifically for petrol combustion engines, and those would not be used.
What are the assumptions? I'm sorry, I'm not up to speed on this. What are the assumptions of what proportion of vehicle sales would come from this segment? I mean,
very low.
Even long term.
No, well, so if the global countries are to be believed, well, a lot of these will actually not sell combustion engines as soon as in the next 5 to 7 years. I think India made a statement, right? From 2030 onwards, we will not have combustion engines, only hybrid and electric vehicles. Now, whether we reach there or remains to be seen. But I'm just saying the pace is picking up, guys. If NBCC signed this MOU to set up charging stations, so on and so forth, we may not be there in 5 years, but we may be there in...
Is this all emerging from Gadkari's comments?
No, but I mean, look, I think we need to wake up and see what this... We've got to find a way to converge this whole made in India thing with figuring out where we stand in this electric vehicle situation, right? And we had a story come out of the Indian Economic Forum yesterday where Sajid spoke with the ABB India head, who said that he submitted a bid for 4,500 electric vehicle charging stations. So whether it's the batteries bit or the actual cars bit, where the batteries is the key part of this, or it's the infrastructure to repower or charge these vehicles, I think in the next several months and years, we'll see many more players come into the market and see what can we do to fit into this requirement of, new green vehicles. So, ABB's story is interesting. 4,500 electric, which is a really small number compared to the size of this country. But it's a good beginning.
It's a start.
Good beginning, yeah. All right, that story is up on BloombergQuint.com. Now, the final thing we wanted to bring to you on First Word this morning is a new set of provisions or proposed provisions for corporate governance that are applicable to listed companies in India. Now, these were proposals made by a corporate governance committee that was constituted by SEBI, led by Uday Kotak, had several well-known business leaders on it, corporate lawyers, chartered accountants, proxy firm heads, and all of that. And it's about a 177-page report, guys. So I'll admit that I'm still reading all of it and absorbing all of it and trying to figure out what all of it means. But here are some of the highlights. So we'll put up the first set of some key takeaways. I think one that I haven't really put on this plate, but, is sort of, they've recommended an expansion of the board. The Companies Act currently says you must have minimum 3 directors. And for listed companies, the committee has said you must have minimum 6 directors. So that's a doubling of board. So just imagine the number of directors now that companies will need, the entire listed universe will need if this were to become an actual provision. Then they've said 50% of the directors should be independent. They've said the chairman must be a non-executive director. There should be a separation of the roles of the chairman and the managing director and CEO, at least one woman independent director. There should be a framework for sharing insider information. And you'll start seeing the imprint of recent corporate controversies in some of these points, right? Framework for sharing insider information. You remember Cyrus Mistry raising the issue of how much information was going to Ratan Tata, who was not necessarily the head of Tata Sons anymore, but of Tata Trusts, who was the promoter of Tata Sons, and how much information should or should not be shared. So they've considered a framework, because under the Prevention of Insider Trading regulations, you cannot actually share any unpublished price-sensitive information, which is insider information. So in this case, they've said, but there may be legitimate reasons for why you would need to share them. And so they've set out a framework, a fairly technical, legal-sounding framework that I won't get into. Related parties to get a negative vote. So SEBI does not allow, or SEBI's current provisions under the listing obligations do not allow related parties to vote on any related party transactions, okay? But what these guys are asking for is saying, can you allow for a related party not to cast an affirmative vote? Fine, we get it. You don't want a promoter to back a promoter resolution, but to cast a negative vote. So I asked them why. I was talking to Cyril Schroff yesterday, who was one of the members, and he said because often you have factions within promoters, and one group of the family or one set of promoters may not necessarily agree what the other set of promoters is recommending. Now here, quickly go back to the Raymond case. So you can see the imprint, right? None of them would admit that these cases were related, but I mean, you can go back to the Raymond case and say, so they said, okay, we don't want promoters to back promoter resolutions, so we are allowed to vote on them, but what if one faction or one group of promoters wants to vote against another promoter's resolution? A negative vote should be allowed to be cast. So I thought that was interesting. Remember the JSW case, when suddenly one day JSW about 2 years ago announced that the actual brand, the corporate brand, was owned by a company owned by Sangeeta Jindal, and that JSW would now start paying a royalty and brand fee to her company, a promoter company. And there was quite a bit of fuss. The proxy firms all wrote against this, and then there was some confusion because the companies had to just come into effect. The new listing obligations had just come into effect. Some confusion on whether the Jindals themselves as promoters could vote on this or not vote on this. Eventually it got passed, but they've put in now, proposed new provisions for brand agreements, which would in a sense plug this loophole. So that's interesting. So there's the imprint of the JSW case. And finally, one thing that I thought was interesting, and I'm not fully clear about it as yet, but they've suggested that if a company holds treasury stock, even in a trust, that stock should not be allowed to be voted upon. Now, it's not very clear, that provision. I need to go back and study it, but this may have implications for a lot of companies that hold stock through employee trusts. Like, for instance, L&T owns stock of the company. So treasury stock was outlawed when the New Companies Act came into being, but a lot of companies hold treasury stock through employee trusts. Like A.M. Nayak, in his last interview, told me that he thought that was one of his defenses against a hostile takeover. So I don't know if it applies to employee trusts or just trusts, charitable trusts. But we need to find out a little bit more. But they have suggested no voting on that at all. So that's curious. Now, I suspect what's going to become probably most controversial in all of this, there are many more provisions, I'm not going to get into all of them, but I think the one that makes it mandatory for 50% of the directors on board to be independent. Now, to be very, very clear here, there is already an existing provision in the listing obligations that requires this, which effectively says that in case your chairman of the board is a promoter or an entity related to the promoter, then the board has to be 50% independent. So there is an existing provision that applies to listed companies, and in many companies where the promoter is the chairman, non-executive or otherwise. For instance, I think in Reliance, Mr. Ambani is the chairman. Half the board is already independent. So many companies have had to already implement this when this became part of the SEBI framework. But now this seems to have been extended to all companies. Okay, so they've said that 50% of the directors have to be independent. And so I quizzed Mr. Schroff and a few other members on the committee on why you're doing this. And they said, look, we are seeing companies move towards more distributed ownership, especially all the new age companies, the .com companies, the e-commerce companies, where the controlling shareholder has less than 51%, maybe 20%, 30%. And so we want to see more diversified boards. Because effectively what you're doing by making half the board independent is you're taking away any control that the controlling shareholder has, right? He cannot have his way or her way at the board level, and if you can't have it at the board level, then all your voting rights are pointless because you can't get the board to pass the resolution. What are you going to be able to take to shareholders, right? You have to then adopt extraordinary provisions under the Companies Act to move something to shareholders, so it becomes fairly complex. So you are disempowering the controlling shareholder in something like this, and that's a curious situation everywhere in the world. I don't think too many countries, in fact, I think we might be the first one, if we pass this, first one to mandate that half the board should be independent. In many countries, they make it voluntary or put in these provisions saying if the promoter is a chairman, then half the board should be independent. So I think this should be probably the most controversial one. I don't know how many companies will agree to this. I know for sure that the government has not commented on this. So there are 2 letters from the Corporate Affairs Ministry and the Finance Ministry attached to the report. Both letters have raised objections to several specific provisions that were recommended by this committee. And mostly it's the Corporate Affairs Ministry that has raised several objections, and their grounds have been coupled that SEBI seems to be trying to sort of extend its jurisdiction, get into what the areas are that are covered under company law. Multiple jurisdictions is not a good idea, but most importantly, ease of doing business. The more provisions you add, and I think that might be the other big debate point here, 177 pages of corporate governance provisions. Okay, maybe if you take out all the
The previews, the post views,
Yeah.
the overviews.
50 pages of corporate governance provisions. Just 2 years ago, we saw a new Companies Act. 3 years ago, we saw a new Companies Act come into force. We saw changes in the listing obligations on account of that, changes in Clause 49 on account of that. We strengthened the related party transactions reporting requirements, the voting requirements. We just went through a governance overhaul.
Why was this committee set up? Was there a trigger?
I asked them this question, and they said, there have been several cases recently in the past where some governance provisions have come into question. I don't know whether SEBI felt prompted by what happened in the Tata Mistry, situation,
Okay.
or a series of such things. So, I've asked them, are you being too reactive? Are you trying to be too prescriptive? And it's curious and ironic that this is a panel made up of private sector people who, for the better part of my life, have been telling me government should not be too prescriptive, make regulations principle based.
Yeah.
But I think so that might be the debate points that this will face. Of course, this is open to public comments, and nobody knows whether SEBI will adopt all of this or any of this or what part of this. SEBI seems to be firmly in favor. That's what the committee told me. So we'll know soon enough how much of this becomes reality for corporate India.
Right, and a lot of this is up on BloombergQuint.com, so do go and read some of the details of it. That's all the time we have on First Word, but just giving you a sense of what's coming up later in the show. Basant Maheshwari of Basant Maheshwari Wealth Advisors joins us. We'll also talk economy and interest rates with Keki Mistry of HDFC Limited, and consumer sentiment ahead of festive season with Shekhar Bajaj of Bajaj Electricals.
Well, for now, full tilt towards the day's trade. And let's start off with what's happening in the F&O space. Agam Akil is standing by. Agam, what do the cues point towards this morning?
Well, more consolidation, considering we have seen the Nifty lose out 9,900, but we really haven't seen too much with respect to changes in the indices. When it comes to the Nifty futures, we have seen an increase of as much as 4% in open interest. On the other hand, unwinding seen in the Bank Nifty futures, so about 2% decline there. What am I keeping an eye on? Well, I will be watching out for the Nifty put-call ratio that has come off to a certain extent to around 1.26 from 1.29. But the India Volatility Index has fallen for the 5th straight day, now below the mark of 12 at around 11.7. In terms of the big changes with respect to open interest yesterday, considering the fact that we saw the Nifty come off, we saw a lot more writing in the 9,900 call and the 10,000 call, and on the other hand, some unwinding in the 9,700 puts. But when it comes to stocks, well, we have new entities like BEML and Diwan Housing entering the F&O ban once again. And we are keeping an eye on Jubilant Foodworks, which has seen a further increase of as much as 25% open interest towards fresh longs. And a lot of this has to do with, these brokerage notes coming up. And not only are they upgrading the stock, but also increasing the price target. And we can expect more action in Jubilant Foodworks going into today's trade as well.
Ask that to Abhijit Pathak as well. Agam, thanks a lot for joining us and giving us that perspective. I must say, if you watch Countdown on BloombergQuint, every day at 3:10, Navneet Saluja tells you about what are the stocks that are likely to come out of the F&O ban or go into the F&O ban. And I normally don't say this, but, well, the accuracy rates are pretty impressive. So do tune in for Countdown if you ever want to know what could be happening in tomorrow's session. Abhijit Pathak, Director of Definite Solutions, joins us to tell us what will happen in today's session. Abhijit, good morning. Thanks for joining in. We haven't closed above that key level of 9920 that you've been talking about. We may start off marginally in the green today. What's the index strategy, Abhijit?
Yeah, I think it will remain range bound between this. On the futures, it will be 98.90 on the lower side to something like 99.60, 99.70 on the higher side. And I get a feeling that this might be a no trade day because it might remain range bound. It's a weekend. Okay, one good thing which might happen is because of the Bank Nifty expiry out of the way yesterday, there might be some action in banks. So maybe some action might be seen in banks.
Is that why you have this long call on PSU banks, at least SBI, because they have come off, Abhijit, in the last 15 odd sessions?
Yeah, SBI has been sold off quite a lot from almost 300 to 255 and or 250, sorry. And yesterday I saw in the expiry last 1 hour, although Bank Nifty came down quite a bit, SBI did not come down. So maybe it might be going up today. So it's a good trade with if you can get it at 251, 252 futures with a very tight stop loss of 2 or 3 rupees.
Just keep that strategy on the screen. This is State Bank of India, and the reason I'm saying this is because PSU banks typically haven't had a good move. Abhijit is wanting to go out and try and play the bounce on State Bank of India with a stop loss of 249. It's a tight stop loss. Watch out for this one. Abhijit, can't not talk about Jubilant Foodworks. Good F&O build-up yesterday. The stock is showing momentum. There are some fundamental cues, or rather, there are some, you can argue there are technical cues as well, because it's a brokerage note from Morgan Stanley that is fairly bullish. May show some further reaction today. Are there levels that you would be watching out for on Jubilant?
Yeah, today I think it might go sideways. I don't expect any further action today. I mean, it might open gap up because of the news and might go sideways. So it will be a bit risky to take fresh longs today. But on a pullback over the next couple of days, it might be worth a long again, maybe on Monday or Tuesday, not immediately.
Fair call. Abhijit, we'll leave it at that. Thanks much for taking the time out and joining us today. Have a great weekend. Watch out for State Bank of India. Abhijit Pathak believes that that's one stock that could be in the thick of action in today's session on the long side. It's a tight stop loss, but watch out for that one. Is there some tightness in crude supply? I don't know that, but Pradeep would know that, because crude did have an interesting session on the global markets yesterday. Pradeep, what are the commodity cues suggesting?
So exactly, there are some supply concerns because of another storm approaching the Gulf of Mexico, and Gulf of Mexico is really important because it accounts for around 16-17% of the overall US output, and that was the reason why crude has hardened a bit. Crude has been correcting for a while, and possibly, unless there is significant action later in today's trade, we might end up seeing the first weekly downtick on crude, but that will be able to figure out only when the trade gets over in US. So we'll have to wait for that. But there is a bounce for now, and that's a cue that we'll take. Moving on to gold. Gold prices are holding steady, but they are waiting for the all-important data coming out of US. There is a non-farm payroll data and also unemployment numbers that market is watching out for. And in the meantime, if you look at dollar, dollar index is inching towards 94 mark, and that's interesting. If we breach that, there could be another leg up by a point or two, and that would be really significant, and that may put all the commodities under pressure. Another cue for commodities, very important cue that came yesterday, was something we have been talking about, the high-level meeting between Saudi King and Vladimir Putin. So that is another factor which is kind of supporting crude, not so much other commodities. So crude will probably have a different trend compared to others. That is what the cues tell you. Chinese markets remain shut, so nothing from there. But if you look at LME yesterday, copper was up 2.5, so that is a very strong cue. Other base metal, aluminium, lead, tin, all of them actually rose, other than zinc. So this morning, if you look at it, negative cue on gold, but positive on most of the other commodities.
Should be interesting, Pradeep.
And also rupee could weaken after the bounce over last 2 days, because if dollar is inching towards 94, that would mean a correction in rupee.
Anything that the equity market should watch out for from the commodity cues piece?
So that way, you have probably the ICE sugar that moved higher for the second day, and also overall the currency market reaction would normally have a bearing on equity as well. And in the short term, at least, the relationship is kind of direct. So if rupee weakens, there are chances that there would be pressure on the Nifty and Sensex as well. And of course, there's a positive cue for the upstream companies if crude is again moving up.
Yeah, so that should be interesting. In moments from now, we'll also get in our research team members to talk about all the key stocks which are fundamentally impacting the session today. But Pradeep, suffice to say, amongst other things to watch out for, I think the Hypercity Shopper Stop deal could well keep Shopper Stop excited. We've been talking about it non-stop for the last 3 days. Today will not be any different.
Definitely. And also what kind of announcements come from the GST Council, actually. I think that is the biggest cue that the entire market will watch out for. And if at all there is a relief, I think there can't be any bigger stimulus in the short term, at least for equity market. Yeah. I don't know about economy.
Well, let's wait and watch. Okay, time for the research huddle and getting all the stocks in news today, Pradeep.
Okay, so let's move across to our research team and find out what they have picked up. What are the top stories? Exactly, just as Niraj mentioned, that the Shopper Stop deal is the biggest cue really to watch out for. And we have our entire research team with us today. Darshan, Nikki, Shraddha and Agam. Well, to begin with, Darshan, what are you watching for?
See, basically there's this report that Citi's come out with Aurobindo Pharma. Why is it interesting is for the first time that the management has admitted that they've got the EIR for the Unit 4. Which is the injectable unit, which is the biggest unit that they have. You know, there were a lot of speculations whether this plant is clear or no. So this note actually puts to rest that Aurobindo's Unit 4 is cleared. So Citi had hosted the management of Aurobindo Pharma in roadshows in Hong Kong, and they met investors. And some of the key highlights that came in, and the management indicated that there is no meaningful outstanding issues with the US FDA now. They have received the EIR for the Unit 4 injectable unit, which will be considered extremely positive. And they're saying the other large facilities have also been successfully inspected, not so very long. So as far as compliance issues are concerned with the US FDA, they are totally clean. Apart from it, they are saying that on Renvela, it was important. They are saying that they could see some competition in the tablets over the next few months, but they believe that they will be the sole player for the suspension drug. Apart from it, they are saying that they expect healthy growth in the US markets to continue despite higher pricing pressure. So overall, generic comments coming in, but the reason that we have said this is because now it's official. The management itself has said that the Unit 4 has gotten the EIR, which will mean that more approvals will start coming in, because that was a concern that the market had on Aurobindo.
So that is on Aurobindo. But I think yesterday there was a lot of speculation about the future of IDFC and Shriram deal, Shraddha. Now it seems the deal is still on.
Yes, it is. All they have done is that extended the exclusivity period for another month, as the 90-day agreement was set to expire today. So they will continue with the talks, is what they have said. And the companies have cited the extensive due diligence process which is involved in the ongoing discussions as the reason for this extension. Of course, both the companies will continue to work on the swap ratios and also a new structure, more importantly, because over the next 1 month. Now, under the proposed structure, the Shriram City Union Finance was supposed to be absorbed into IDFC Bank. Shriram Transport Finance would have remained a standalone NBFC, which should have become a subsidiary of IDFC Limited. And that was the pain point as far as Shriram Transport was concerned, because it would start attracting a holding company valuation discount. The life and general insurance businesses were also expected to remain subsidiaries of IDFC. Now, media reports do say that a fresh merger structure has been worked in, because both sets of minority shareholders didn't seem very happy with respect to the merger prospects. Additionally, you had the RBI master directions, which were issued late in September, where they had said that banks cannot hold more than 10% in NBFCs except for housing finance companies. So that again brought about a question mark on the current on the deal structure in the current format. So what happens in case the deal doesn't go through? Well, analysts are saying that if that does happen, Shriram Transport Finance stands to benefit. One, because of that holding company structure valuation discount that they would have gotten, and again they are present in the niche commercial vehicle financing business, and if it became a part of IDFC group, then it would expose the company shareholders to unregulated businesses which they would not really want. So JP Morgan has said that the original proposed structure would involve a lot more diversified business and a potential holding company discount. So Shriram Transport Finance, if it had a structure wherein it was it would be a separately listed company, that would be positive. So if this doesn't go through, positive for Shriram Transport Finance holders, and if it does go through, it's IDFC group companies which stand to benefit more. This is what analysts are saying.
So Shriram Transport, IDFC and Aurobindo. Agam, what are you watching for?
Jubilant Foodworks, 2 more notes coming in, both positive. Yes, 2 more. So I think we can expect a little more impetus in Jubilant Foodworks. First one is Morgan Stanley. They have upgraded the stock with the price target also raised to 1,780 from 900. Of course, this is the growing momentum in the same-store sales growth, and they are expecting the stock to move up by as much as 45%. Of course, their bull case scenario is rupees 2,500 rupees. Going on to Goldman Sachs, once again, they are building on the same-store sales growth of around 6%, on the back of which EBITDA EBITDA could grow by as much as 24%. And they are also suggesting that because of the fact that they have refreshed their menu, this could be another factor which could see a positivity, at least as far as Jubilant Food was going in. So 2 more notes coming in positive as far as Jubilant Food was concerned.
I think it's Friday, we should order some pizza today and help Jubilant Food works.
Yeah, I remember yesterday also you were talking about some research notes.
Yesterday it was Macquarie, who actually, and Goldman actually said the same thing pretty much what Macquarie said. So I think everyone started to being a little more bullish on Jubilant now.
So let's see how much was actually priced in yesterday itself. But Nikki, which other stocks are you watching?
So bunch of stocks. First is Tata Steel. Now Q2 and FI first half sales numbers have come in. India's sales are up as much as 90.5% in this quarter. European sales have risen 15%. Overall sales volume growth for quarter on year-on-year basis have risen as much as 16%, and for the first half have risen by as much as 12%. Now good set of numbers that we're looking at for Tata Steel. Next up that we have on our list is Phoenix Mills. Now the company has acquired an additional land parcel in Pune for around 21.25 crore. And it has acquired an additional 50% stake in Columbus Investment for a sum of around 55 lakhs. Third one we have is Patel Engineering. Now the company has issued optionally convertible debentures to its lender under the S4A norms for a sum of around 1,240 crore and will be raising an additional 300 crore via right issue of equity shares. Now do remember that the market capitalization of this company is as much as 1,219 odd crore. So this is a big deal that's coming through. And open market transaction, Wakarangi sentimentally positive. Promoters have bought in some stake, and Mirza International there, the promoters have sold 1 lakh shares. As of June 2017, the shareholding pattern stood at much as 74 odd %. In bulk deals now, Pratap Snacks, SBI Fund Management has bought in as much as 1.87% stake in the company for around 56 odd crore. And then we have the second in the list, we have Kesar Petro Products. Now Principal Mutual Fund has bought in as much as 2.1% stake in the company for a sum of around 11 odd crore.
So some big investors don't really feel that Pratap Snacks is overvalued still. Well, thanks a lot, Nikki, Darshan, Shraddha and Agam for that. Himang Jani joins us for discussion. And Himang, the first up I think is the biggest story of the day, like Niraj also mentioned earlier, is the deal between Shoppers Stop and Futures Group for Hypercity. What's your comment on that?
Well, good morning. I think, definitely there's a sense that if you look at the valuation per se at about 0.6, EV to sales is a bit lower than the recently concluded deal of Star and the existing listed space, where the valuation is somewhere in the range of about 0.75 to almost about 2 times EV to sales. Also the fact that, some of the retail franchise owners, existing, companies which are listed are doing so well. And Future Retail has posted a smart turnaround, and now that they are, targeting some of these, players which are not listed. So overall, we think that there is going to be a good amount of growth visibility. The valuation looks quite okay. So there could be a good positive reaction on Future Retail. Though short term, there might be a bit of volatility, but overall, both from a growth visibility point of view, the GST point of view, we think that Future Retail is extremely well placed.
Himang, good morning and thanks for joining in. What about Jubilant FoodWorks? The reason I bring it up is because it's an active stock, and multiple brokerages, some of your peers, have initiated or rather upgraded the stock, citing higher same-store sales growth and maybe some pricing power as well. Are you guys at Sharekhan enthused by this?
No, Niraj, we don't have a specific, reco there, but our overall feel is that, in the consumer discretionary space, you're seeing, indications of a strong revival in the same-store sales growth. And, Jubilant, in fact, after many quarters, last couple of quarters, you're seeing some growth come back to it. So definitely, people would, be a little positive there. We haven't been, recommending this stock. It's not part of our coverage, so no specific reco from our side.
A set of stocks, Hemang, that I thought were very active in trade yesterday. We'll get in technical opinions thereof, but specialty chemicals starting to make a bit of a comeback. Gujarat Fluoro, Navin Fluoro, Deepak Nitride, very strong delivery volumes and strong price action. Do you have coverage there at all on any of the stocks within that pocket?
See, we have a coverage on SRF, Niraj, which is also in a similar, specialty chemicals stroke gas play. And I think one of the reasons why we are seeing some traction in this particular space is because of the kind of benefits that one is expecting from the export policy and with respect to GST, because there's a sense that the government is actively considering some kind of a relaxation for the export sector. Given the fact that there are some issues with respect to refund, government is proactively trying to resolve some of those. So I think you might see some positive traction because of that, apart from the fact that their core business is doing pretty well. And our expectation on SRF for this quarter is that there is going to be almost about 32% kind of a growth in terms of their EBITDA because of the better pricing and margin that they have. So we continue to like that space.
Do you have a view on Shriram Transports in the backdrop where two parties, IDFC and Shriram Transport, have extended the deadline for negotiations?
So I think there are two basic, monitorables as far as this deal is concerned. One is whether there is going to be any change in the original structure, wherein Shriram Transport Finance would be put as a subsidiary company of IDFC, and because of that, there might be a case of some kind of a holding company discount. So that's something that we will be watching out for. And of course, what is the overall swap ratio that one is really looking at? There is definitely a sense that if the deal does not go through, then this Shriram Transport Finance, which has underperformed and which is getting some kind of a discount, so there could be some positive take or relief because of that. But other than that, there is no real major change in our view as far as this deal is concerned.
Okay, 8:45. Himang, stay on. So much more to talk about. But let's get in our experts, derivatives as well as technical experts on board to talk about how are they approaching trade this afternoon. Hadrian Mendoka and Gaurav Bisa join us. Need no introduction. Gentlemen, both of you, thank you so much for joining in. Hadrian, what would you be doing on the indices today, either the Nifty or the Bank Nifty?
Yeah, see, the Nifty actually yesterday saw some kind of profit booking after a 250-point rally, and I think that's what we were expecting, that we'll see a little more consolidation as we even previously discussed. So I think this consolidation phase will continue. Yesterday we saw Nifty actually making a small bearish kind of a pattern, but that should not be a cause of concern or anything that should trouble anyone, because the significance does not seem to be that great at the current juncture. Now, why? Because in the past 4 days, 5 days, Nifty has constantly made a higher top, higher bottom, and this structure will come to an end, or it will see a turnaround or a reversal only if the levels of somewhere close to the Nifty 9850, the lows of 9850 is broken convincingly on the closing basis. So 9850 is something that I would watch out for and keep a stop loss on every long position on the Nifty, and definitely would continue to hold long positions on the Nifty.
Correct. In fact, interestingly, yesterday we discussed this, how interestingly 80 to 90% of our experts who have come on the channel over say last 1 week or so, they have referred to this 9950. So that's an important point really to watch out for so far as Nifty is concerned. But Gaurav, is there a trade in index, whether Nifty or Nifty Bank?
Good morning. I would have more focus on Bank Nifty. There are a couple of reasons to that. As the gentleman was speaking, that my fellow participant was speaking about Nifty seeing some sort of profit booking, and 9920 is a very crucial mark. We have seen some sort of reversals happening. If you look at the option chain, 9900 call option commands a very high concentration, and we are not yet seeing delta hedging happening because it is not closing above 9920 convincingly. If it does, we can expect 10,000 plus levels in 3 to 4 days. On the other hand, if you look at the data for Bank Nifty, 24,000 put option commands one of the highest concentration since last 3 to 4 weeks. And it has been bouncing from those levels, so it is near that continuum. So I would rather have a trade on Bank Nifty wherein the stop loss can be 20,900. On the upside, one can expect 24,300 kind of levels. If we have a close about 24,250 spot levels, then I would not be surprised with another 400-500 point upside coming in matter of just 3 to 4 days. There is a strong breakout that can be seen above 24,250 spot levels. So I would be a buyer. I would have a bullish bias for Bank Nifty in next 3 to 4 days.
Gaurav, gas companies have been doing well over the last few sessions, and you have a buy call on Petronet.
Well, yes, if you look at Petronet for last 3 to 4 months, it has been consolidating. We have seen decent long positions now seen getting built. 240 call option has the highest concentration, and that has been the case for last 3 to 4 months. It has not yet closed above 240, but it can be a preemptive trade wherein we can expect a close above 240. And once we see a close above 240, we will see a good amount of short covering in the call side as well. So, and it can head towards 250 with relative ease, and a swift move towards 250, 255 can be seen. So on that premise, one can have a stop loss of 236, be long on Petronet futures for targets of 245 to 250.
Adrian, couple ideas, slightly indifferent names, Century Textiles and Tata Communication. Why these?
Yes, Century Textile actually, we saw a very strong breakout happening. Now there is a dual breakout actually that has happened on Century Textile. So first is the symmetrical triangle pattern breakout on the daily chart, and second is also a declining trend line breakout. Thirdly, it is also convincingly managed to close above the 21 DMA. So all these confluence of positive things that are happening for Century Textile is actually going to, hold this overall reversal that we have seen in Century. Apart from this, also doing a trend and a range analysis, I think once again Century is going to head towards the higher end of the range, and that is coming close to a target of 1310 to 1320. Whereas on a downside, you should keep a stop loss of close to 1260 to 1265. So yes, definitely Century Textile is a good buy from here on. As far as Tata Communication is concerned, the stock is also showing signs of a good reversal. Volumes have been pretty impressive from the past 2 to 3 days. Delivery based buying has also been witnessed in Tata Communications. So your short term target on Tata Communication is coming close to 720 to 725, whereas on a downside you keep a stop loss close to 680.
Okay. And Gaurav, you also have a call on Tata Chemical.
Well, yes, it has come out of consolidation. We have seen some good long positions getting built. If you look at the Y chain, it's not significant. We are not seeing double-digit numbers, but yes, on a consistent basis, we are seeing long positions getting built, and it gave a breakout as well yesterday. So with a stop loss of 660, one can buy Tata Chem futures for targets of 685, 690.
Okay. So these are some of these trading ideas for the day, and time for Bloomberg Edge, our special segment. Jayesh Khilnani today has the fear and greed indicator for us, and the stock in focus is PVR, whose fear and greed indicator has turned positive. Jayesh, what does the chart say?
Morning, Pradeep. So looks to be a promising Friday for PVR as the fear and greed indicator has turned positive with yesterday's close. Now let's have a look at what the fear and greed actually does. Well, it's a proprietary indicator which measures the weighted average of the true range of two averages, and it also oscillates on a zero baseline. So very simple to interpret. It gives you a buy and sell signal. So follow the color for the signal. Green color is indicative of buy and sell is indicated by red color. Now going back to the chart of PVR, what we have seen is that as of yesterday, the bottom panel, there you see the fear and greed indicator. It oscillates between the colors, and as of yesterday's close, that's the area where it has turned positive. So some upside for PVR on the cards.
Let's just focus on that for a bit. As you can see, there is a series of red ticks on that screen before it's turned green. Jayesh, what's the efficacy of this indicator for PVR?
So Niraj, in the last 1 year, there were about 12 trades that were generated either on the buy or the sell side. And if one would have followed all of them, then the profit rate would be about 42%.
Okay, that's probably not too bad. Thanks a lot for that, Jayesh. But remember, it's just turned green. Maybe there is some technical upside today. Fundamentally, Hemang, it's not been the best of quarters that has gone by for these exhibition companies. Does it make sense to start an investment into either PVR or Inox for that matter?
Well, Niraj, this quarter has not been good, but if you look at PVR over the last couple of years, it's been one of the best performing companies. I think the reason why we are seeing underperformance is because this quarter was not so good for the box office collections per se, and secondly, there was an expectation that GST could be a big positive for some of these companies where already the tax incidence is on a higher side, but the actual GST rate has not turned out to be that positive, and there are certain operational issues. So which is why we are seeing some kind of an underperformance. We've been liking Inox, which is at about 20-22% discount to a PVR. So yeah, from a 1 year kind of a perspective, I think it looks to be much better, and we are looking at about 18-20% kind of an upside for an INOX from current price point.
There is a standoff in Tamil Nadu going on right now between the screen operators and state government, and it was interesting to note, the Monetary Policy Committee actually observed this time that state governments are probably overtaxing certain areas and stifling growth. They've also mentioned the stamp duty rates, which have gone up quite a bit, and that affects sectors like real estate and all. So it would be interesting to see how state governments really look at or have a relook at these policies and probably offer some kind of relief to the likes of PVR. Another stock that Himang you like is Godrej Industries. Is it because Godrej Agrawal IPO?
Yeah, that is one of the key triggers that we are looking at because it has a 63% stake, and because of this there is going to be an unlocking of value to the tune of about 4,300 crore, including the holding company discount. Other than that, also if you look at Godrej Industries investee companies, most of them are doing exceptionally well, whether it's Godrej Property or Godrej Consumer Products, and their core chemical business is also shaping up extremely well. So this has been one of our theses that, because of the better performance of the underlying investee companies, there is going to be a good growth ahead for Godrej Industries. And the stock incidentally has corrected in the past 2 weeks by almost about 12%. So we are, looking at a 15% kind of an uptake in Godrej Industries from current levels.
Okay, stay on, gentlemen. So much more to talk about, but we're talking about IPOs. Himang was referring to Godrej Agrawal as well. That frantic pace of IPOs continues. The latest offering comes from the financial services space, and Shraddha Babala is here to tell us what should one watch out for when it comes to MAS Financial Services.
Well, just to start off with, they've already raised 135 crores by allotting shares at the upper price band to about 15 anchor investors. Now, this is a Gujarat-based NBFC which has operations in about 6 states. Now, if you look at what is on offer in this IPO, they're looking to raise 460 crores, out of which 233 crores will be fresh issue, and 227 crores is offer for sale from 3 existing investors. The good part is that the promoters are not going to sell any stake in this IPO. Now, if you look at the business portfolio of the company, micro enterprise loans, which is the blue band that you can see, occupies a significant chunk of its AUM. So over the years, even while they have been trying to diversify into other segments, it still forms 58%, followed by SME loans, which is about 24% of the portfolio. Even if you look at the geographical distribution, MAS Financial faces significant risk, because as much as 60% of its AUM comes only from Gujarat, while it has about 20% exposure to Maharashtra. Now, if you look at the financials, net interest income for the company has grown at a CAGR of 23%, while net profit has grown at a CAGR of 26% over the FY13 to 17 period. Net interest margin stood at a strong 6.6% in FY17, while gross NPAs have continued to hover around that 1.1% levels over the last 5 years. Now, if you compare it to peers, the AUM growth for the companies came at about 32% over the 4-year period, which compares or comes very closer to Bajaj Finance. And broadly, even if you look at the return ratios, they stand, the ROA stands at 3.3%, which is again comparable to Bajaj Finance and superior to its closest peers, which would be Shriram City Union and Capital First. Same is the case when it comes to ROE. Now, let's look at the valuation picture and compare it to how it stands as compared to its peers. Now, with the upper price band of 459, MAS Financial is valued at 6.8 times its FY17 price to book. That is, of course, on a pre-IPO basis. Now, if you look at it on a post-dilution basis, that ratio comes to close to 4 times, which is again at a significant premium both to Shriram City Union and Capital First. And in fact, it is comparable more to Bajaj Finance, whose assets under management size is as much as 20 times. So should one invest and And what are the risks versus opportunities? Well, the risks come from geographical concentration and the high exposure to micro enterprise loans. And what are the analysts saying? Well, based on the growth profile and the superior return ratios, analysts are asking to subscribe to this issue. You have Quant Broking, India Infoline, Prabhudas Leeladhar and Angel, all of which have a subscribe on the issue.
So it's micro enterprise, not micro credit, right?
No.
Yeah, so it's positioned next to the Shriram City Unions and likes of those companies.
Yes.
Well, thanks, Shraddha, for that. Well, Hemang, you have any thoughts on this one?
Well, I think, NBFC as a space has been quite, in the limelight and because the market is, good, a lot of these companies would try to, get corpus through IPO route. What I want to focus on is the fact that, if you look at the, profile of the, borrowers of mass financials, typically micro enterprise and the, appliances and all is what they are focusing on. And unorganized segment is the one which is going through a lot of stress in the current period because of GST and because of the slowdown that we are witnessing. So, when some of these NBFCs are coming to the market at a valuation of about 6.5 times, 7 times price to book, and where they're, focusing on the SME segment or the, small retail segment, then I don't think the market is currently reckoning the fact that, next few quarters could be quite challenging in terms of performance. So that is what I think, I'm worried about. But overall, as a space, I definitely agree that, this offers a good growth visibility. So there is going to be a lot of appetite for the IPO as well as, even in the listed space, you will see a lot of people wanting to buy NBFC stocks.
Yeah, the question is whether you buy any of the currently listed well-performing NBFCs or go into a new name, as good as the name may be. But yeah, I'm sure it'll find takers. So we'll get to know in the next 3 days. But the pre-open rate's about to kick in. Remember, Asia's having a slight positive tick handover from the US markets. SGX is indicating a mildly positive start. So we will have a slight tick in the green. These are the first rates on the pre-open session. Don't look at the Sensex. I don't think we'll have a 200-point move. The Nifty, probably a better indicator. Anywhere between 10 to 25 odd points is what we could start off the day with. Shopper Stop, a bunch of mid caps actually in today's session. We'll talk about the large caps as well. The likes of Shopper Stop, Future Retail, Jubilant Foodworks could well be in focus. Shopper Stop, I don't know if there's a 19% up move there. The deal that was going to happen and people kind of knew about it. I'll be surprised if it's a 19% uptick, even though the valuations are better. But let's wait and watch. You never know. Future Retail about 8.5% higher. Good going there. I'm interested in Shriram Transport Finance as well. Actually starting off with a bunch of non-index names because all of these are newsmakers in the session today. No negative moves out there. And last but not the least, yeah, we already highlighted Jubilant Foodworks. Just want to see what the PSU banks are up to because after days and days of a downtick, there are some bullish voices appearing from a trade perspective post the Bank Nifty expiry yesterday. The SBIs, PNBs and the BOBs of the world could be an interesting set of stocks today.
Yeah, and Walchand Nagar is a stock to watch out for. Yesterday the stock moved up and there are reports of big investors being interested. But if you look at it, the stock is up only just 1%. Tata Steel reported good production numbers. Is that stock really reacting? That's another stock to watch out for. Also, Patel Engineering plans to issue convertible debentures, optionally convertible debentures under S4A. This one has not reacted as yet. KEC International is also in news. They've restructured their subsidiaries. Is there an impact here? Well, no. So mid cap and small caps are not really reacting this morning. That's interesting. Pratap Snacks is another stock to watch out for. But let's have a look at Rupee that has opened, and we have been expecting a weak opening, 65.21 versus 65.14. So yesterday was quite volatile. But what is interesting, 65.21 is a fresh high, so fresh low rather from rupees angle if you look at it. So yesterday we didn't breach 65.20 in intraday volatility. We in fact recovered from 65.18.19. But today this a breakdown, if you say so, is on the back of the further strength in dollar that has been observed. And if you look at 65.20.21 mark now, so we kind of retraced from 65.80 odd levels, and we went all the way up to 65. Now if we are unable to hold at higher levels, there could be more correction, but all eyes on dollar, I believe. It's the dollar which is actually driving the movement in dollar rupee. There is nothing much from our end or from the domestic cues really after the policy.
Yeah, I just want to mark Ramki, Pradeep. because before we get back to our guests, actually Nikki's waiting by as well, but Ramki Infra should come up on your screen after a stellar move for the last few sessions, up another 3.5%. They're going to consider issuing convertible warrants to promoters, and Adi Financial, which is the investment arm of Vallabh Bansali. Should be interesting for this one too. But what our brokerage is saying, Nikki Mirchandani is here with the top brokerage calls for the morning. Nikki, good morning.
Hi, so first one we are picking up is BASF India. Now MK has initiated a buy rating with a target price of around 2,212 rupees, which indicates an upside of nearly 51% for this counter. It says that substantial capex has been already done in the past, which has reduced the dependence on imports for this company. And this, on back of this, the company should be able to demonstrate a good recovery in its net profit as well as return ratios. It expects the return on capital to go up to 22% in FY20 as compared to 4% in FY17. That's a huge jump that we're looking at. Also, manufacturing business and new product launches should be the key that will be the key for this company. Revenue and EBITDA is expected to grow at a CAGR of nearly 14 and 39% over a span of next 3 years on account of settlement of technical issues and also the enhanced capacity utilization. Second that we have in our list is Motilal on Shilpa Medicare. Now the brokerage has maintained a buy rating on this counter and indicates a target price of 805, which means a potential upside of nearly 41% for this company. It says that the company is progressing well on its new launches and has nearly 26 pending approvals. Also, it says that the sales in US is expected to ramp up and led by its existing products as well as new launches. It expects the US revenue to grow as much as 400 odd crore in the next 3 years, and it says that the overall earnings is expected to grow at a CAGR of nearly 42% over a span of next 2 years. This, along with the US, the company is also well positioned in the European markets. Now, the third bit is a sectoral report, which is a little long one. It says that Jeffrey has assumed a coverage on consumer staple. It says that brokerage is building improvement in volumes as well as sales. It says that the sector valuations are currently rich and leaves a little margin for the investors. Says that it has a hold rating both for almost all the bunch of companies, Colgate, Imami, Godrej, ITC, Marico, Nestle and United Spirit, but it has a buy rating only for HUL with a target price of nearly 1,320 per share. It expects a gradual pickup in volume growth for this company, expects the volume revenue EPS to grow at a CAGR of nearly 6, 10 and 16.5% respectively in the span of next 3 years. For Colgate, it feels that it will continue to lose its market share to Patanjali and Dabur. For Godrej Consumer, it says that African business growth holds the key for a span of next 2 to 3 years. And third is ITC. Cigarette business is expected to remain under pressure, while other businesses are expected to see some gradual pickup thereon.
Thanks a lot for that, Nikki. Well, interesting. Watch out for, amongst other names, the stock that Motilal Oswal initiated, or rather not initiated coverage, but upgraded the target price. Shilpa Medicare up about 7% in the pre-open session. But what's been up for the last few sessions is Bansali Engineering Polymers. It's been on a tear, quite frankly. It's gained quite substantially over the last few sessions. Now, what is the trigger for the stock? Sumit Sarkar joins in with an analysis. Sumit, good morning.
Yes, the stock has been running up a lot. Now, in the last 12 months, it has run up more than 380%. In the 6 months, more than 170%. So let's first see what the company does. Now, BPL is a 1700 crore market cap company manufacturing Absocol, which is a plastic material which you commonly see in cars as bumpers and spoilers. Now, it is also used as a raw material in telecommunication and luggage. Now, currently, there are only 2 players in India manufacturing this product. One is BAPL, the second one is Ineos Styrolutions India. Now, so there's no much competition for this company. Now, BPL currently has a capacity of around 80,000 tons per annum, and along with this, BPL is also a debt-free company and has been paying dividends on a regular basis. Now, if you see the shareholding pattern of the company in the last 1 year, promoters have been increasing stake in this company. Now, they have increased their stake to 56.5% according to the June quarter holding as compared to 51.6% in September 2016. Now, coming to the financials of the company. Now, revenue of the company has jumped by 1/3 to 704 crore in financial year 2017, and for the first quarter of financial year 2018, it stood at more than 250 crore. Now, coming to the net profit, in the first quarter of financial year 2017, the company did a net profit of 17 crore, which is more than what the company did in the full financial year of 2016. Margins in the same period have also expanded by 400 basis points to 11% in the first quarter of financial year 2018. Now, coming to the return ratios of the company for financial year 2017, the company reported a very good set of return ratios. Return on equity stood at 22%, return on capital employed stood at 48%, and return on asset was close to 9%.
So, are there risks to the rally, Somit, very quickly?
There are other factors which is leading to this rally. First is that there are, as I said, there are only two players in this market, and currently the demand for the product manufactured by BPL exceeds supply, and these two players can currently only meet the 65 to 70% of the current demand, and the rest of the other demand is met by imports. Now, secondly, the company has also planned a 300 crore capital expenditure to increase the capacity to 1,37,000 tons per annum, and this will be done by December 2018. Now, this capital expenditure will be fully funded by internal accruals. Now, along with this, to meet the growing demand, the company is increasing its capacity utilization to 95% from current 85%. Moreover, BPL has also given a revenue growth guidance of 30%. Now, coming to the concerns, if you see in the current market condition, the company has only two concerns. First is fluctuating raw material prices, which have also impacted the company in the past, and the second one is if there is any delay in the planned expenditure, then there could be an opportunity loss to market share, because their competitor INEOS has also planned a capacity expansion. Now, finally, when you see the valuations of the company is trading nearly 2 times price to earnings ratio of INEOS, but this can be justified given the growth and expansion plans of the company.
Okay, Somit, many thanks for that. Pansali Engineering Polymers. Any thoughts, Adrian, out here? Have you looked at the stock?
Yeah, BPL has been on a tear, as you already said, and great analysis from Somit out there. But the way the stock has been moving, it has surpassed all the momentum oscillators, and there are high probabilities that we may see a little bit of consolidation. In fact, some kind of time correction that I'm expecting in the stock. Definitely there has been a very strong breakout on the daily charts, but from here on, I think 110, 115 should be that resistance zone that BPL has to cross past with impressive volumes that would actually get me going on the stock. So you can definitely hold on to your long positions, but creating long position at these levels, I think you should wait for a while and get to see if the momentum actually builds on or not.
Hemang, do you like any of these defense-related stocks, Walchand Nagar, BEL, BEML, or anything else?
See, both BEL and BEML is something that we like. BEL is a part of our coverage also, and the sense that we are getting is that there is going to be an additional thrust on the domestic defense capabilities. And particularly for BEL, they got a recent order in terms of the offset manufacturing. So there's a sense that BEL is already doing well, and there could be some more deals in terms of transfer of technology, etc. So we are looking at about 15 to 18% kind of an upside. BEML is on a market cap to sales basis is available at about 1.3 time valuations. So though currently, if you look at the performance of BEML, it is not looking that great, but because of the segments that they are operating in and the kind of visibility that one is really looking at in terms of defense, mining, and few other areas, there is definitely going to be a good, interesting opportunity there for BEML also.
Okay. It's 9:10 or 9:11. Let's tell you all that you need to know with regards to trade today. Remember, the pre-open rates have settled, and we'll start off marginally in the green. But amongst the stocks that you should focus on, the much-awaited future retail shopper stop deal is done. IDFC says valuations for shoppers are better than expected and sees massive deleveraging on a consolidated basis for the stock.
IDFC Bank Shriram Group extended exclusivity pack to November 8th. JP Morgan says that the move is a potential positive for Shriram Transport, but swap ratio remains the key. Jubilant FoodWorks in focus as Morgan Stanley upgrades the stock with a price target of 1780
Goldman Sachs also sees improving same-store sales growth trends.
And Raamdeo Infra to hold an EGM on October 30th to consider convertible warrants to promoters and non-promoters, which includes Akash Bhansali's Adi Financial.
To primary markets, it's the final day for Bajaj Agrawal's IPO. Issue's been subscribed 2.33 times. The IPO of Mass Financial opens today. Issue is priced between 456 and 459 rupees.
And companies like Chembond Chemicals, Cupid, HPL Electric, Parag Milk and S. Chand will meet investors today.
Okay, just before we start the pre-open rates, actually Hemang, okay, we'll get in Hemang's stock idea in just moments from now. He's got a view on NMDC as well, but very, very close to market open. So let's just get in the top trading ideas for now from both Hadrian as well as Gaurav. Gaurav, if you were to bet on one stock today, which one would that be?
I think Capital First would be one. I think not just for today, for next week as well. If you get it around 740, 735, it's opening around 745 or so. But if you get it around 740, I think it's a wonderful stock. Have a stop loss of 720. On the upside, one can expect 10%.
It's a buy call on Capital First by Gaurav Bisa. Hadrian, your top call for the morning?
Yeah, I'll stick with Coromandel International. The stock is actually on the verge of a beautiful symmetrical triangle breakout on the weekly charts. And today being a Friday close, if we see something above 455, I think definitely it's a good buy from here on. And I'm seeing a decent 9 to 10% upside. So that comes to a target of 500 plus on a Coromandel International.
Okay, so these are the stocks really to watch out for, and we are very close to the market open today, Niraj. Let's see how market reacts to some of the important news items.
Including the currency that you were speaking about, Pradeep, but maybe the stocks-specific news will be more in focus. So 30 seconds to market open. Watch out for PSU banks from the large cap space. There is a belief that maybe there could be a bit of a bounce over the course of the next 2 or 3 sessions amongst traders. So that's an interesting basket. We've got some top trading ideas from our experts already, and among stock specific movers, no surprise there, Shopper Stop could well be in focus. We'll keep an eye out for future retail, naturally so, and a bunch of mid caps in which there is some institutional action happening or likely, and all of those would be in focus as well. But here are the first rates this Friday morning on the Indian markets. 18 points or 19 odd points above 9900 for the Nifty, the Sensex 55 odd points, and the Nifty Bank knocking on 24,100. Yeah, that's actually not having a bad start, quite frankly, in line with what the large caps or the benchmark indices are doing. I think the broader market should also come up on your screen. And another day of 0.5% up move for the mid cap index. The small caps was up 1% yesterday, starting off about 0.5% in today's session as well. Let's bring up the heat map and show you what's moving and what's not. The color, the mood, and the mood is clearly green. No big movers on either the gaining side or the losing side, but by and large, stocks are in the green. So this may change. You don't really have a trend here, but 1/3% now for the Nifty. It's pretty good going, and I think to an extent, banks like ICICI, Kotak, and Yes Bank are contributing. HDFC is a heavyweight which is higher in trade as well. And not too many losers, quite frankly. Tata Motors is the top loser, which is down about 1%. Otherwise, not too many losers. What about specific stocks, which are newsmakers? I'm sure Pradeep has a whole list. Let me just outline 3 or 4 stocks which are likely or which would have moved. So Shopper Stop, naturally so. It's a high valuation deal compared to what the market is estimating as per IDFC. That stock is up about 7% in the session today. So good going for that one. Historically low tariffs for wind power. Not surprising though. Inox Wind is not really reacting too much, but it's a stock that's been beaten down so much, and maybe that's why the stock is just lying flattish, about 1% higher. Morgan Stanley hikes target on Jubilant FoodWorks. I think the target has been taken to 1780. That stock is up about a couple of percentage points. I think one more brokerage note should come up, maybe Shilpa Medicare. I think that was the stock on which Motilal initiated. The deadline extended for Shriram Transport and IDFC, not having too much of an impact on Shriram Transport either. So those are 2 stocks which are also starting off buoyed by the market sentiment, which is not doing too badly. And warrants to be issued to Adi Financial. They're going to consider. Remember, it's not happened, but the name Adi Financial would evoke interest, and that's why Raamdeo Infra has been buzzing for the last few sessions, and in today's trade as well, up in the session. Last but not the least, the key stocks in yesterday's session, which moved up as a pack, specialty chemicals, marginally higher, but in the green nevertheless, which is actually a good sign. Pradeep, what else are you spotting?
Well, I'll be watching out for Suzlon first of all, because the kind of comments that we hear from that company, and also the IDFC and Shriram Transport Financial, the duo is really interesting, and this pack is in news. Also, one should look at the metal pack, because the way base metals have been moving up. What happens to Vedanta, Hindalco, and we'll also, of course, check with our experts whether they like any trade, if there is a long trade really in metal pack.
Yeah, so that's a set of stocks which are probably not doing all that bad. Let's just get one list of the BSE 500 top gainers and top losers before we go in and get in final comments from our experts, Hemang Jani and the others. But let's just get a list of the top movers in the session today, and you will see that the list comprises of all the newsmakers, quite frankly, in the session today. So good going thereof. Nifty contributor should come up on your screen in just a moment, and you'll probably see HDFC being that key stock which seems to be holding out the index, helping hold out the index along with the other financials. But final thoughts from our experts. Adrian, to you first. Anything that stands out for you?
Yeah, I'd like to bring the cement stocks, that are in focus actually from the past 2 days, and Dalmia Bharat is that we are liking even technically. The stock is actually broken up from a flag pattern on the daily charts. And projections are actually indicating that Dalmia Bharat is well on its way towards the 2800 mark very soon. So I think Dalmia Bharat is a good short-term bet on the long side. You could keep a target of close to 2800, and your stop loss should be close to 2725 odd levels.
Okay, Gaurav, your top call. Anything that stands out for you as we open trade?
KPIT looks good among the IT space, and it can head towards the 135, 136 levels. One can have a stop loss of 126 and be long in the name.
Okay, and Hemang Jani, your call on NMDC. Why are you recommending this one?
See, Niraj, metal as a space is doing pretty well this quarter. In particular, the numbers are going to be very good. This is the largest manufacturer in the country today. And we are looking at about 19% kind of a price growth on a YOY basis, and about 4 to 5% kind of a volume growth. So that makes it quite attractive in terms of 15 to 20% kind of an uptick. Apart from that, it's at 4% dividend yield also. So we think that this is one of the companies that would do exceptionally well, even from a short to medium term perspective. So that's why we have put out a buy call there.
Okay. Gentlemen, all of you, thanks so much for joining in today and giving us your perspectives. That's, of course, the view from Hemang Jani, Gaurav Bisa, as well as Adrian Mendonca. The market's doing okay, about 0.25% higher. Good time to get in Basant Maheshwari. His partner needs no introduction, quite frankly. I don't need to introduce him. But Basant, thanks so much for taking the time out and joining us today. I'm starting off. Actually, let's start off with your thoughts on the markets first before I move on to some very interesting tweets that you gave out on October 3rd. Firstly, is this a good time to be investing? People can take their choices of where to invest in. Is it a good time to invest, or would you believe people should keep some gunpowder dry?
Good to be with you, Niraj, again. So I think it's not about the time to invest. What's more important is what you're investing in. So if you're investing in the wrong stocks, so no time is good. If you're investing in the right stocks, any time is good time. So eternally we are born bulls, so the blood of a bull runs inside us. So we are always fully invested, and we don't keep gunpowder dry because we are so bullish about what we own. So we get it wrong and we get it right. That's another issue altogether. But I think if the companies that we have bought, if they are going to grow, if they're going to show earnings growth, any time is a good time to invest. And we are completely invested. But overall, if you ask me, the red flags in the economy, I mean, of course, everybody's talking about that, but what you have to understand is 2019 is election year and 2018 is pre-election year. So if you're a farmer, I think you should celebrate the next 18 months. But if you're not a farmer, if you're an investor, if you're a middle class guy, I think you have to, deal with the ball again. So it's going to swing around a lot of it. So you just keep your wickets intact and play safely. That's what I can say.
So what, try and buy into companies which will benefit as a result of higher farm income, Basant?
No, not that. I mean, I don't think the government, whatever reforms it had to do, it has done the reforms. And that's, I think two reforms which the government says it has done. One is demonetization. It was not a reform. It was basically a surprise or a shock to everybody. So none of the brokerages, none of the market participants expected demonetization to be a reform. So it was an action which is now being sold as a reform, if you ask me. And the second is the GST. GST is an old thing. We've been talking about GST for almost a decade now. So I don't think anything new is going to come for the stock market as such. And whatever things come, it could only be populist in some way. So because of that, and because of the fact that a major section of your market isn't able to stand on its feet, and let me give you an example. IT is in a limbo. Pharma, there's a problem. PSU banks, I mean, if you recover the old money first, then you go and lend to the new guys. So 3 sectors out of your entire investing horizon is under a problem. So what's left with? Private financials, a few auto companies, auto ancillaries, the odd textile company, and some company. So the choice was limited, and I assume it's going to stay limited. So, but if you're a stock picker, you need 3, 4, 5, 7, 10 companies to put your money in. You don't need 50 companies. 50 companies are for the index fund. So you just zero down on your 5, 7, 10 companies, and then you say, okay, that's the way it should be. So this is what we are doing right now, and this is what we have done all the time.
That's really the problem, because a few stocks which are left where you don't see any major issue, the stocks you have been liking, you still have a conviction buy on these stocks, but the valuations have moved from expensive to highly expensive to historically all-time expensive zones. A true investor like you, a long-term investor like you, how do you really react to this scenario?
Let me give you a different view to this thing. So, if you and your friend are being chased by a tiger, you don't have to run faster than the tiger. You have to run faster than your friend. So how do we put that in the market? So if there are 50 companies growing at 30%, so all those 50 companies, so investors are splitting their money across the 50 companies. So if there are 10 companies growing at 30%, then the investors' money chases those 10 companies. So all throughout the 300-year history of stock markets, money, liquidity has chased growth. And that's what it always does. So I'm not trying to, let's take the case of the new issue which got listed. You don't own it, it's not a recommendation. I'm just discussing it just for the sake of a discussion. Pratap Snacks, I think it's called. Trades at 40 times FY20 with less than 5% net margin. So it says you're going to improve margin and do this and do that. So 40 times FY20 for a Pratap Snacks. I mean, you can say it's expensive. I thought it was expensive at 900. So it went up 20%. So, I mean, in a market, it's not about valuations all the time. It's about how many companies are able to grow at that rate. So if the number of companies that are able to grow at that rate reduces, obviously the money that chases those companies obviously creates a more bigger impact. So I think that's the way to be it. But of course, I'd like to buy them cheaper. But if you don't buy them cheaper, then what do? You buy them, and if the growth is predictable, sustainable, and sure, then you assume, okay, I won't make money for 1 year, I won't make money for 9 months, but the incremental earnings growth is going to reduce the valuations for me. But for that, you have to be very sure of what you're buying. And if you are sure about what you're buying, then you might say, okay, I won't make money for 8 months, for 9 months, for 1 year, in the worst case scenario. But if the growth is predictable, the stocks automatically get cheaper with each passing quarter. So that's how we are playing the game.
Basant, let's talk about a couple of pockets since you're talking about newly listed spaces. Insurance, I'm looking at the tweet that you gave out. Spending a lot of time first, then making profits. A great rocket to be in after it leaves the Earth's orbit. Whoa, that's interesting. But to simplify it for the benefit of viewers who are tuned in right now, is it a good pocket to invest in if somebody doesn't mind holding on for a first few years of uncertainty or lack of returns?
Niraj, it's very good to say that I'm a long-term investor and I want to buy this company for the next 20 years. It doesn't happen in life like that. So you buy a company, and if the Nasdaq falls 100 points, you call up your broker and you say, what's wrong with the company? So insurance companies globally, so I get this theory of how American insurance companies have made so much money, but for the first several years, you have to get your theory right. For example, insurance is basically a bet. It's a bet at whether you're going to die or you're not going to die. So to get the theory right, so I can write as much of premium by giving it 10% lower than my competitor. But the risks of that will never come to you next month because nobody dies the following month when he takes an insurance. So over the 5, 7, 10 years, you have to create a pool of reserves for yourself. You have to create a pool where you get a sense of how the market is evolving, how life expectancy actually turns out to be. And the data for that right now, if you ask me, is only with the Life Insurance Corporation of India. And that's going to blockbuster IPO, but I don't think LIC is going to grow at that rate. So globally, in short, people have made huge amounts of. So if you have a 50-year view, I'll say if you have a 50-year view, buy a bank, buy an insurance company, split your money 50-50 these two, and buy the best of the risk managers. Because you could be running an insurance company for 50 years, for 60 years, for 70 years, and one wrong premium pricing could put you almost back to square one. So if you ask me, these insurance companies are very fashionable to talk about them because India is an under-penetrated market, and insurance would grow because savings would grow and our per capita income would go to $2,500 and $3,000 and all that. But on an overall scale, you need to invest a lot into your reserves. You need to really plow back, and then only you can show profits. I think Birla Insurance Company, I read somewhere Birla Sun Life, they were running this insurance business. They weren't able to show profits for the first 5, 7, 8, 10 years. And that too, I don't think we are in a position where we can actually predict what's going to happen. So if you ask me on an insurance company, if you have a 20-year view, go and buy them. I think you're going to make 15, 18% CAGR for the next 20 years. But it's easy to talk about 20 years. In a stock market, 20 years is 200 years. So I don't think that's the way to be. And plus, on an overall scale, the idea of leaving the Earth's orbit was when I wrote that, because most of the rockets that you launch, they don't leave the Earth's orbit. They come back before they leave the atmosphere. So it was in that context that we have to give it a lot of time, and then only we can invest. And these private insurers, they are 15, 20 years old. So you don't have a history for them.
Well, you also tweeted recently that growth is out of the India growth story and only a story remains. So what happens to the consumer stocks that have been moving up, quoting at high valuation, be it auto or other durables, and also the companies, the financiers who have been funding the story?
India is such a huge thing. You can find a segment and move along. But when I said that the growth has gone out, it meant that IT, pharma, PSU banks, they're all back, and there's no growth there. So obviously the consumer segment will do well, because for one company to do well, you don't need the entire economy to do well. And in all kinds of markets, you will always find your pocket of companies that will do well. So I think you don't want to buy 50 companies, you don't want to buy 100 companies. Out of 4,000, 5,000 listed companies, all we want to own are the 8 to 10 companies or the 15 companies that should do well. So because of that, I think those companies would do well. But as you rightly pointed out, the valuations have gone up, but I think they're going to remain there till the time the growth continues. So, the P ratio, once it gets set, it's a 60, 40, 50, whatever. So it's like Newton's law of motion. It's like inertia. So it remains in that range unless the growth drops. So if the growth is not dropping, then the P ratio remains in that range. But the moment the growth drops, then there's a problem. So as long as the growth is there, as long as the music is on, you can keep dancing. But the moment the music stops, I think we'll have to look at the exit door.
Basant, we are almost out of time, but one quick answer on NBFCs. I know you've liked them in the past. You probably still invested in a bunch of those. Stay invested, make fresh investments, or the music
super
is
bullish.
off?
I remain super bullish on NBFCs. We own NBFCs, and specifically in housing finance companies, we remain super bullish.
Wow. Okay. On that bullish note, Basant Maheshwari, thank you so much for taking the time out and joining us today on BloombergQuint. Well, that's the view. Super bullish. To his credit, he was one of the early identifiers of some of the housing finance companies as stocks, and he's been riding the wave, which is actually pretty good news.
But his view is pretty much stock specific. So he says you have to pick up winners in every sector.
Yeah.
But there's a little bit of a paradox here. I mean, how long can the consumer really, keep propping these stocks up, or consumer demand will stay if the rest of the economy is not doing well?
Anybody's guess. Though, we'll save that for another time. For now, we need to slip into a break. Just a small programming note here. The India Economic Summit is on in New Delhi. And like yesterday, we'll be getting you all the big voices from the forum. So Bloomberg View's Daniel Moss is currently moderating a session on how textiles can play a crucial role in weaving a better future. But up next, we discuss economy and interest rates with Keki Mistry of HDFC and consumer sentiment ahead of the festive season with Shekhar Bajaj of Bajaj Electricals. Stay tuned.
Are we live?
Welcome to programming that's insightful, authoritative, and at your fingertips.
Bringing news alive. So immersive, so new, and so addictive. You will want it no other way.
The Bloomberg Terminal, accessed only by over 325,000 marquee investors across the world until now.
Business news, we're news for business people.
Get a ringside seat as BloombergQuint goes to the India Economic Summit. With exclusive sessions and panel discussion, 5th and 6th October, only with BloombergQuint.
Your chance to get some personal advice from veteran investor Raamdeo Agrawal. 10 of the best viewer queries will get featured on every episode. Write to us now at askbq@bloombergquint.com or send in your queries on our Twitter and Facebook pages using the hashtag AskBQ. The first episode on 10th October discusses the power of focus.
Be sure to include the word Raamdeo in your query so we can route it to him to answer.
And we will get the man himself to answer your question.
Welcome back. You're watching Indian Open. With the festive season upon us, the consumption space seems to be looking upbeat. Joining us now to tell us how cheerful Bajaj Electricals is this time round or this Diwali, we have with us the Managing Director and the Chairman of the company, Shekhar Bajaj. Good morning to you, Mr. Bajaj. Is it going to be a happy Diwali?
I think so. Our September also has been very strong because we are basically concentrating on our secondary sale. So secondary sale across, whether it's appliances or fans or lighting, all have shown positive growths.
So can you give us a little bit more granular detail when you say positive growth? Have you seen sales this September beat, let's say, last year's September, same period last year? Do you think that you might in fact see additional growth this Diwali year on year? Or do you believe that some of the pain from, let's say, the GST related issues or the demon related issues continue to eat into both revenue and profits?
Luckily, we are in the small appliances and fans, which is really not getting impacted. Once the GST is in place, the market is not that vulnerable to small appliances, and therefore secondary sale from September, because July was of course very weak because of the GST coming in, August was stable, and September onward our third quarter, August, October, December should be a very strong quarter because everything is now, all the problems are behind us. At the dealer level, there are some problems of GST therefore they've given an additional 3 months to make the required for them to make the application, but otherwise in terms of marketplace there is no restriction and there is no problems, and therefore secondary sales are going extremely strong, and our distribution which we have done over the last 1.5 years is now going to show substantial benefit in the October-December quarter.
For the year gone by, which is FY17, you in fact saw a contraction in revenue down by about 7% or so. The estimates are that you might overcome that and do a 10% increase in revenue for FY18. Are you on course for that, or do you think you might even beat that number?
No, there is a little change which has happened because of GST, that we have decided that we are not increasing our pricing. So therefore, the consumer price remains the same in spite of GST has gone up to 28% in most of our products, but we are absorbing that 1 or 2% by improving our productivity, etc., and cost reduction. So we will not pass it on. But the result of that is, because of earlier the VAT and all was about 14 to 15%, now it's become 28% in most of the appliances and fan. Therefore, our realization, because when we talk about turnover, is on the basis of without tax, and therefore our realization, instead of 100 plus say 18% for the VAT and service tax, was 118. Now it will be 90 plus 28%. So our realization is anything around 10% lower. So even if I have a growth of 10%, my top line will only show 0 growth. So therefore, if it is showing a 5% growth, one should be happy. It's really a 15% growth. Our bottom line is not going to get impacted because our margin remains the same. Our margin, if it was 10 rupees, it remains 10 rupees on 118 rupees. Only thing is the turnover will show a dip of 10% if we have the same numbers coming up. So luckily the numbers are showing good growth, but the top line may not show such a heavy growth, which really does not matter. So because of that, we may end up,
Yeah, please carry on. Please finish your point, sir.
Yeah, please. Yeah, so I was saying that because of that, we were looking at a 10% growth over the year. It may be maybe 5 or 6%, may not be full 10%, because from July onward the GST has come in. So 9 months my realization will be lower by 10% for the same value and same volume. We will have a 10% lesser top line numbers, and therefore to that extent there may be that 10% growth will not come, but positive growth is definitely expected. In case of EPC, luckily the impact is only 3%. So instead of billing at 100 rupees, now I'm billing at 97 rupees. So to that extent, I don't think that 20% growth objective, and we are still looking at from 4,300 crores, we are still looking at a 5,000 crores. We have to reach that number anyway.
Yeah, that's what I was going to ask you, because I think there's a brokerage note which says that you would probably reach 5,000 crores. But my question to you was that you've started this range and reach expansion program, which is of course giving you traction in a lot of states which probably were not the strongest for you. That's not coming in at a higher cost? Are you saying your margins will be comfortable at the levels that you have enjoyed in FY17?
Absolutely. There is a cost increase, which is in terms of my fixed cost is going to be there, because I'm going now shop to shop doing the distribution. But because I'm not giving those extra discount which I was giving to wholesalers, my first level margin will more than make up for that. So my first level margin compared to the previous year has gone up by 2 to 3%, and against which if the cost goes up by 1%, I'm still better off by 2%. So once I get my growth, you see EBITDA margins will go up, which was hardly 4-5% last year, will go up to 6-7%, maybe even 8% by end of the year.
New home sales, Mr. Bajaj, in the quarter gone by haven't been great. I think there's a note which said that it were down about 35% quarter-on-quarter basis. How does the lack of real estate demand impact your sales?
See, a lot of our products are going, if there's no new housing coming up, then to that extent we get impacted, because people buy fans, the people buy appliances. If they're not going for new housing, obviously those or lighting even, so that will get impacted. But because of our distribution reach having gone up, we've crossed 1 lakh outlets. By end of the year, we should be having 1,60,000 outlets through which our products will be sold on a weekly basis. This is called the beat. We go to all the 1 lakh outlet every week, month on month, year on year. So that is why, from the consumer's point of view, the retailers are very, very happy and excited, and therefore to that extent we expect that there will be a double-digit growth coming on third quarter onwards. It will be double-digit, and the fourth quarter may be even better.
Mr. Bajaj, you recently introduced higher premium products through your tie-up with Morphy Richards and Nardi. What has the reception by consumers been for those, and how have those lines fared?
I think personally it was more to give a brand equity that MR Morphy Richards has very, very latest products in the marketplace. I'm not looking at those giving me any numbers that is going to give me any traction that, okay, because of that my sale has gone up by 1 or 2%. Sorry, it is not going to give me those type of numbers. It's only to show that yes, we are higher up in terms of technology. We have good products which are there, but neither world over anybody is expecting that is going to take major share. In India, unfortunately, most of these products are being used by servants, etc. So only those who are housewives who themselves do the cooking, they are the ones who are going to buy it. Those who are depending on servants don't want to buy these high end because it doesn't really matter. They will buy something which is more robust, more Indian.
Okay. So just to go back to the earlier answer that you gave us, which was your top line net of tax, you said that you were expecting a 5% increase if one was not to factor in the tax bit in your top line. So this is 5% demand increase, or would you be able to give us some sort of volume growth number that might help guide us to understand what the next few quarters would look like?
As I mentioned, that we are looking at the third quarter to be, we are looking at a 10% plus growth coming out of consumer business and 20% plus coming out of our EPC business. And in the fourth quarter, it will be much higher. It's very difficult. Nowadays, every day things change. So to make a forecast that was going to happen fourth quarter, but we are still gunning towards that 5,000 crores in spite of the value, my top line getting impacted because of the value of each product which is being sold in the consumer product is down by 10% because of the GST coming in. We still are saying we must try to reach a level of 5,000 crores, which I think would make us feel very excited.
So I have one final question on your project business. I think you already told us that you'd be absorbing the GST cost on that to the effect of about 3% or so, and yet you hope to be able to maintain net margins, EBITDA margins, that is at the company level, at about 5.8 or 6%. Can you give us a sense of what the future of the order book looks like in your EPC or projects business?
See, EPC order book is over 3,500 crores. That is why we are very clear that we should be in a position to have a growth of 20% plus in the EPC business, because whether we like it or not, if we don't do it, we'll get into the LD and other problems will come. So we have to expedite our execution as fast as we can, because order is not a problem. It's our capacity and capability to get the site available from the government and our capability to be able to execute it fast. So there's enough orders, so I don't see any problem that because of no orders we are not able to go. So that's why I said 20% plus we must grow.
All right, fair enough. You've given us a very good...
EPC is concerned. And
please go ahead, sir. Okay. So
yes, please.
We'll wrap it up here then. Thank you so much, Mr. Bajaj, for joining us. It looks like it will be a good festival season for you and for Bajaj Electricals. Thanks very much for being on BloombergQuint. Shekhar Bajaj there, sounding fairly confident about good growth this coming quarter, the quarter underway or September month, except for, I think, the GST-related adjustments that we'll see in some of the numbers.
And no impact on margins as well.
No impact on margins as well. So that's good news, right?
That's very good news.
Yeah.
By the way, the markets, just need to mark that before we get to our next guest. We are now comfortably over 0.5%. And I think oil and gas is leading the way. So GAIL, ONGC, To an extent, even Petronet is not doing too badly, but Petronet not a part of the index. But GAIL, ONGC doing very well for themselves. And then lower down the order, I think consumption seems to be doing okay. Jubilant Foodworks up about 3.5%. Cement is not doing too badly. So there's a set of stocks which seem to be doing okay for themselves. However, to our next corporate voice, the RBI's decision to stay put in the last monetary policy hasn't really taken anybody by surprise, and with inflation inching towards the central bank's medium-term target, chances of another rate cut in the future looks rather dim. The regulator has also come out with a proposal to change the low pricing mechanism. Joining us now is one of India's biggest voices from the banking industry, Keki Mistry. Welcome to the show, Mr. Mistry. Thanks so much for taking the time out. The RBI sounded almost certain that there won't be rate action for the next 12 to 18 odd months. At least that's what we made of the commentary. What's your sense?
Well, I wouldn't put it like that. I would say that everything is going to be data dependent. RBI is going to carefully look at all the data that emerges, whether it is data on inflation, whether it is data on commodity prices globally, whether it is oil prices, whether it is GDP numbers, it is the farm loan waiver and the impact that has, and then take a call on what to do. So I don't think anything is preset or pre-decided for the next 12 months, 18 months, as you put it. I think everything is data dependent. I've been saying for a very long time that we are as close to the bottom of the interest rate cycle as we are likely to get. It does not preclude the possibility of a 0.25% cut in rates over the next few months. But the big bang drop that we saw in lending rates over the last 12 months, I think that very, very clearly is behind us.
Okay, a 25 bips cut is not going to move the needle. And if a 50 basis points cut is out of the question, will the government have to walk the rope alone without RBI support? Do you sense that growth can happen over the course of the next couple of quarters, or will we have to wait for long?
Rate cuts, well, first of all, rate cuts can never really by themselves move the investment cycle. People start investing in projects not because interest rates are low, they invest in projects because they see demand. So you have to create demand. You have to first thing that has to be done is there is excess capacity that is there in the system. Capacity utilization is about 72-73% from what I've read. And till and until we see that number getting closer to 80 or beyond 80, you're not going to see any big bang private sector investments take place. So initially, it will have to be, the investments will have to be government-led. And then gradually over a period of time, as the capacity utilization in the system increases, private sector investments will also start taking off. So we are not very far away from seeing a pickup in investments, but we are not at the spot where in the next 1 month or 2 months or 3 months, you will see any big pickup in investments. That's my sense.
But is it?
So investments are going to be led not by interest rates, but by demand.
But is it difficult to predict how far is this far away, Mr. Mistry?
I think it's very difficult to time these things. A year ago, people said that we would see investments in 12 to 18 months. We past 12 months, we've not seen that pick up in investments. So it would be futile to give a date. But as far as the growth numbers per se are concerned, I clearly believe that the next 2 quarters we will see a pickup in growth. And one of the reasons for the pickup in the growth will be also, or one of the reasons why RBI first of all reduced the growth target is because we had 1 weak quarter. Now, if you have a year where the targets, where the numbers are based on 4 quarterly figures or 4 quarterly numbers, and one of those numbers tends to be low, which is now a fact, we know it is low, then automatically the target for the whole year gets adjusted. Having said that, we must bear in mind that the 3rd and 4th quarters of last year were relatively weak because these were the quarters immediately after demonetization, which had a temporary slowdown in growth at that point of time. That has picked up significantly since then. I think demonetization is behind us. But having said that, when we come to the 3rd and 4th quarters of the current year, we'll be comparing these numbers with the previous year where the numbers were low. So automatically the numbers will start reflecting a much healthier picture going forward than what they were in the first quarter.
Okay. There was a note which said that RERA would act as a spoiler for the near term. How long will this near term last if there is a big impact in the first place?
All right, so I don't think I can get into numbers because we are close to we are not close. We have actually, the quarter is over, so we can't get into numbers. But having said that, anything that is done, anything that is good which is done for the economy, anything which is good which is done to shake up the system and make it more robust in the long term will have a short-term negative impact. We saw that with demonetization. My personal view is that demonetization has brought in huge benefits. The benefits are in the form of the fact that the Income Tax Department now has access to information about a whole lot of people who in the past were never paying taxes and suddenly found a lot of cash which they were able to deposit into their bank accounts. So the tax department can now get these people on board, which can then improve the tax to GDP ratio. We have seen that the other benefit of demonetization has been the fact that people have converted their cash into financial assets, and those financial assets are now finding their way into mutual funds, into equity markets, into bond markets. So it's moving into those. So liquid cash, what used to hitherto be liquid cash, has now moved into the financial markets, which is benefiting the entire system. So the point I'm making is that anything which you do which is good for the system in the long term will have a short-term negative impact. Now, RERA on its part has a short-term slowdown because of the fact that that the process of registering projects is taking more time than what probably was envisaged earlier. RERA is a state subject, so in different states there are different authorities, different speed at which the RERA registration is being carried out. But believe me, this is a short-term impact. I don't see growth getting impacted. Again, I don't want to get into numbers, but I don't see growth getting impacted in any significant manner, whether it is for the second quarter, third quarter, or fourth quarter.
But would it improve post-quarter?
In my view, this registration process, the registration process should be streamlined over the next quarter or so.
Okay, but will this impact that RERA has caused die down in a hurry? Can you predict the quarters, Mr. Mistry?
I think it will die down. I can't get into months on when it will happen. It's very difficult to put this, but the next couple of months, 2 months, 3 months maximum, I would think things should come back to normalcy. And it's not as if there's that major an impact on demand. I mean, when you see numbers, you will see for yourself. It's not that major an impact.
Okay, a chat with developers suggests that the key segment which is likely to do well is low-income housing or affordable housing. Is that margin accretive enough for companies such as HDFC?
I think there is growth happening across the economy, whether it is in the affordable housing segment or whether it is in the middle income segment. But yes, the affordable segment, affordable housing segment, or the low income segment, as you put it, affords huge opportunities, and definitely it's something we would like to capitalize on or start looking at. And as far as margins are concerned, as far as spreads are concerned, we managed our spreads very well over this last couple of decades. And my sense is that spreads will continue to remain in the band in which they've always been, which is between 2.20 and 2.35. So I would expect that the spreads would remain stable, and I expect that the growth in the low income segment or the affordable housing segment, the potential for growth is enormous.
Okay, you have maintained that while you've created multiple businesses in the last few years, where unlocking will happen, you're actively looking at new business opportunities that will bring in value over the next few years. Can you elaborate on this?
Well, there are different things we have to look at. Everything is currently in the drawing board, so I don't think I can comment specifically on any progress that has taken place on any particular new venture we would look at. But we can look at things like distressed asset fund. And when I talk of distressed asset, I'm not talking of distressed steel plant or a cement plant or stuff like that, but specifically related to real estate. Or we could look at something like an alternate investment structure, an AIF structure, or we could look at a REIT structure. So there are different things that we can look at, and we are looking at, and we are examining these different options. Health insurance is another option we can look at. But these are things which will evolve over a period of time. So it's not as if you're going to see 3 businesses or 4 businesses being set up in the next 3 months or 6 months. These things take time. But yes, we have created a lot of value in our existing subsidiaries. These subsidiaries are now ripe. They're all ready for, our mature businesses. And now it is time to create value in terms of creating something for the future.
All right, Mr. Mistry, we'll leave it at that. Thanks so much for taking the time out and joining us on BloombergQuint. Well, that's HDFC. Not he clearly said that even if there is an impact caused due to RERA, it is not a big impact and it won't be a long-term impact.
Yeah, and I just wanted to point out, Niraj, that I think almost every company we've spoken to since we've launched BQ Live has sounded fairly upbeat about future prospects, if not the existing quarter, the quarter that just has finished, right?
Yeah.
So it's interesting. I mean, that doesn't necessarily fully match with either the perception that there is gloom in the economy or something doesn't fit here. I'm not sure what it is, whether it's companies being fairly optimistic or it's people being too gloomy.
Yeah, or it ties in with the conversation that we are having, that just when you thought that everything was looking gloom and doom, there are these
things
figures
have started picking up. Yeah, maybe that's just the case. All right, we're about to wrap it up here, but just a small programming note. The India Economic Summit is on in Delhi. We've got a little army there covering all the events. Like yesterday, we'll be getting you all the big voices from the forum. So Bloomberg View's Daniel Moss currently moderating a session on how textiles can play a crucial role in weaving a better future. As you can see, that's that panel playing out in the window right next to me. We'll bring you more on that panel later on through the course of the day. And of course, all the big corporate leader interviews that our team out there is conducting, all of that will be up on BloombergQuint very soon.
With that, it's a wrap on this leg of today's Indian Open, but up next is the FNO show. Thanks so much for watching.